Hello, and welcome back to our education series. I'm going to be talking today about the short-term trading, specifically short-term trend following, and even more specifically, short-term trend following loans. But before I dive in, just again, welcome to Systematic Trading Educational Videos. I want to do a short disclaimer. I'm not a financial advisor, so do your own due diligence. Take whatever I'm saying with a grain of salt, and basically investigate on your own. But obviously I've been doing it for years, so anyway, make sure to do your own due diligence. Now, let's talk about the short-term trading. So what is short-term trading? It's, if you know what the mean reversion is, and people hear about the mean reversion, it is similar idea where we look for a reversion to the mean, where we look for a continuation of the main direction. Since we're talking about the long system, it means that it's a continuation going up. Right, so we want to make sure that it goes up. Now, we're not going to use the timed exits, we're not going to use the profit targets. Actually, we will, just a little bit hint, but not right now. Just want to show you that you can do the short-term trend following, where you will follow the trend as long as that little tiny trend exists, and still get very nice results. Sometimes even better results than the long-term trend following, which I was talking about a couple of weeks ago. So, let me dive in a little bit more into it. Now, what's the main characteristics? The setup is, for the long system, is as follows. We need to make sure that our longer term trend is up. We want to make sure that we protect ourselves from the bear market, because it's similar to the long-term trend following, where we don't want to get into the market if it's in a bad condition. We want to sense if there's a very short-term pullback, and there's a way to do it. Also, we want to get in on a strength. So that's the main difference between the mean reversion. In the mean reversion world, you usually want to get in on the weakness. We want to get in on the strength. So that's the key difference, at least in my opinion, between the mean reversion setup and this setup. I'm going to use a lot of mean reversion setup though, don't get me wrong. Now, how do we define what trend is up? Well, there's like a zillion ways of doing it. You can use the channels, Keltner channel, Bollinger channel, there's like other channels to use. You can use the just simple moving averages, exponential moving average, double exponential, whatever the moving averages is. And you can also use something like momentum indicators, and the longer term momentum indicators, like such as RSI on 100 days as an example, or 200 days. So it's a very long momentum indicator, but it gives me an idea that the trend is up. Okay. I can also use the percent return, which is the rate of change, on a longer look back, such as, let's say, 200 trading days. Basically, there's all kinds of ways of doing the same thing, of defining if my stock is in an uptrend. Okay. Now, how do I protect myself from the bear market? Well, I can do the same kind of a definition of what I just did for my stock, but instead of a stock, I can use an index for it and define if it's an uptrend. And if it's an uptrend, I'm letting myself to trade all the stocks. If it's a downtrend, basically it's, let's say, below 200-day moving average, then I'm not going to trade anything for this stock, for any of the stocks. Even though the stocks might be up, but I'm not trading any stocks at that point in time, because I'm saying that overall, the likelihood for me to succeed is very slim. Okay. Now, how do I measure the pullback? Well, I can measure the pullback again now in a short term, because we're looking for a short-term pullback. So it could be the moving average, we pulled back and closed below moving average. Or it could be percent return. Oh, on the short term we dropped 2% on in like 5 days. Okay, or it could be short-term RSI. Well, a 3-day RSI is below 25 or 30. So you get the theme, right? The theme is it's a short-term pullback, but on a longer term trend. And now, the last piece of this puzzle, how do we define the strength? There's a gazillion ways to define the strength. When I construct a system, and I prefer to, let's say, to use the strength as my on-stop indicator. Because on-stop means that not only we closed last study, let's say, and we are in the pullback, but that pullback is done. Right? We decided that, okay, from the previous day close, we're going to go above the X amount of percentage, or above the ATR, or above a certain Keltner value, Bollinger value, whatever it is. Basically, we're trying to resume the trend going again up because it's a long system. So this is how I define the trend and how I define the pullback and how I define the strength. Now let me show you quickly. This is like a typical setup, and you can see this is Apple. I just picked it from Yahoo Finance, and you can see that this is my red line is the 200-day moving average. So the stock has to be above it, right? So we know that this is an uptrend stock in this area. This is where it's below it, which means it was a downtrend. But here it's an uptrend, and at the same time this is the 14-day simple moving average. You can see how the stock can close below it, and when it does, it means that it is now in a short-term pullback. But at the same time, you can see how sometimes it can resume, even though it's closed below it, but during the day it resumed. Let's say it hit the previous day's close and closed below, it went above the previous day close with a certain amount of percentage, and that means that we got in. And this is our short-term trend. This is a tiny little trend because we're not looking for a gigantic move, but it could be enough for us to get the benefits. So let me show you what I mean. Here's the very simple system. All the rules actually in here. It's a Russell 1000 stock set, meaning that it's a universe of Russell 1000 stocks, past and current. For my back testing, I'm using that. I'm going to get into 10 positions at a time and allocate 10% per position. It's very simple position sizing. I'm going to use the market filter as my 200-day simple moving average on the Russell 1000 index. Okay? If the index is above this 200-day moving average, then we will let it trade. If it's below, we're not letting it trade at all. The trend filter for the stock itself, for each stock within the Russell 1000 stock universe, has to be above 100-day exponential moving average and two values of ATR of 14 days, which is basically a Keltner channel of 102. Okay, this is what it means. If you want to know a little bit more details, jump on our webinars or workshops, or write me email. We can talk about it, and I'm going to show you the information at the end of this video how to contact me. But if you want to learn more, ask me questions and I will reply to you what it means if you don't know what it means. Now the pullback itself is very simple. I chose one pullback. I could have chosen other pullbacks. I just chose this one because it's very simple and very easy to understand. If our closing price went below and closed below the 5-day exponential moving average, we consider that to be a pullback. But then, what do? Let's say we have lots of candidates, and now at this point in time, we need to choose only the first 10. So we rank them by the highest rate of change over 200 days. This way, I would know that these are the best stocks right now, which were rallying the most lately. So I'm not just randomly entering into all the candidates, I'm going to get into the good candidates. And this is my strength portion, where my on-stop is 1% above the previous day closing price. And what I do at the exits? Exits, because it's a simple, very simple, short-term trend following system. I'm going to just trail it with two ATRs behind with the trailing stop, or using my initial 2 ATR stop loss. That's it. There's no any other the trailing or any other exits. This is the very simple exit strategy. Okay. Now here's the results. It's a pretty good system. I mean, it beats the market. This is the benchmark is the Russell 1000 by itself. I showed it here. You can see how we're beating it, especially when there's a market that's in a bull mode. We can beat it and get very decent returns, and not as huge of a drawdown as an example back in 2008 scenario, or even in 2022. We get significant drawdowns, but not too huge of a drawdown. Now, here's what you can see, that it generates 100 and something, sometimes 200 orders per year. So it's not that many orders, and yet it's not little. It's not like long-term trend following where you can have, let's say, 20 orders per year. So here we have a lot more orders because we on average stay in the trade for 20 days, around 20 days, 19.4 days on average. My win percentage is 43%, so but my win-loss ratio is almost 2, which means that I win more than I lose, because it's a trend, still a trend following approach. Okay. Now, can we improve it? Well, and by improving it, in my opinion, I would mean that let me reduce my risk. I still get my returns, not maybe as much as I can generate, but I can reduce my risk drastically. So what if we will include the profit target, let's say 4% intraday, right? It's a very similar to mean reversion, which I will talk about in coming weeks, and stay tuned for that. But if you want to do that, what are you going to get? Well, simply put, it's pretty much giving you the returns of what the market does, except that you have very low, very low drawdowns. So my highest drawdown is 18.74%, as you can see, experienced in the right after COVID times, and after that it didn't experience this type of drawdown. So it's very good as far as the drawdowns are concerned, because when I was doing just the trend following, it was around 34%, I think, 35% drawdowns. Here it's 18, so half the percentage of my drawdowns, versus only a little drop on the returns. But what does it mean returns again? If you look closely, now we have not as good of a return, but not as many negative years as well, and not as deep negative years than the previous version of the system. And I have a lot more churns. Instead of 200 trades, I have closer to 400 trades in the last year, as an example. You can see that it has more churn. The reason is because my win percentage is much higher, from 43%, and now it became 67%. But my win-loss ratio is more of a typical for mean reversion, where we tend to be closer to 1, but not exactly 1. So which means that my loss is slightly bigger than my wins. Okay, so this is more of it is graduating more of a mean reversion style, but you can see that it can help you with your drawdowns. Now, just to wrap it up for this short video, can you create a short-term trend following system? Because I mean, people talk about trend following systems, and they never specify which kind. I personally, and Lawrence, and all our students, I mean, we all prefer to separate them out. Long-term trend following versus short-term trend following, and mean reversion. So we have 3 different universes for each one. So this is not like long-term trend following, as you saw. It is a short-term. It's not staying in the trend or a trade for a very long time, and because of this, it doesn't have huge drawdowns. But at the same time, it can have its own drawbacks. I personally sometimes still vary it when the short-term trend following with some of the flavor of mean reversion, where I put the profit target as an example. So it has smaller drawdowns versus long-term trend following. It has a shorter trade duration for people who love to have higher win rate percentages, and especially with the profit target included, and not staying too long in a single trade. This is a pretty good system. It can be good for different portfolios, so like, let's say IRA portfolio or your long-only portfolio systems. So it could be a very good addition for you. And that's my conclusion for today. And if you do have questions, please write it to info@tradingsystems.com. I also encourage you to check out our tradingsystems.com site more. You can get a lot more information over there. You can find links to our books. Read the books, and there's a lot more information in the books, obviously, than I can show it in these videos. And please reach out and stay tuned for more videos. Thank you for watching. Bye.